Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 22nd, 2025, and we're diving into the first quarter earnings report of Metropolitan Bank Holding. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Metropolitan Bank Holding has just released their Q1 2025 results, and there's a lot to unpack, from their strong loan and deposit growth to their robust capital position.
Revenue and profitability overview. Let's start with the financial highlights. Metropolitan Bank Holding reported total revenues of $70.59 million for Q1 2025. John, how does this compare to previous quarters?
Metropolitan's total revenue saw a slight decrease from $71 million in the previous quarter, but an increase from $66.71 million in the same period last year. Their net income for this quarter was $16.4 million, translating to a diluted EPS of $1.45, which is slightly below the forecasted EPS of $1.61.
And what about their net interest margin?
The net interest margin improved to 3.68%, up from 3.66% in the previous quarter and 3.40% a year ago. This indicates effective management of their interest-earning assets and liabilities.
Loan and deposit growth. Metropolitan Bank Holding has shown significant growth in both loans and deposits. Can you elaborate on these figures, John?
Absolutely. Total loans increased by $308 million, or 5.1% from the previous quarter, reaching $6.3 billion. This growth was primarily driven by commercial real estate loans. On the deposit side, they saw a 7.8% increase, with total deposits now at $6.4 billion. This robust growth in both areas underscores their strong business development pipelines.
Capital position and share repurchase. John, how is Metropolitan Bank Holding positioned in terms of capital and liquidity?
The company is well capitalized, with a total risk-based capital ratio of 12.8%, well above regulatory minimums. They also repurchased $12.9 million of common stock, which is about 2% of their shares outstanding. Their liquidity remains strong, with $2.9 billion in cash and secured funding capacity, representing 179% of their estimated uninsured deposits.
Operational efficiencies and future outlook. Let's talk about their operational efficiencies and future outlook. What are the key points here?
Non-interest income was $3.6 million, a decrease from previous periods due to the winding down of their BOSS revenue. Non-interest expenses increased to $42.7 million, driven by higher compensation and professional fees. CEO Mark DeFazio emphasized their focus on risk management and expressed confidence in continued growth, supported by strong business development pipelines.
EPS forecast and analyst expectations. John, the forecasted EPS was a 61s, but the actual EPS came in at 145s. What does this mean for investors?
This represents a miss of 16 cents against the forecast. While the EPS fell short of expectations, the company's strong loan and deposit growth, along with their solid capital position, provide a positive outlook. Investors should weigh these factors when considering the overall performance.
Key takeaways. In summary, Metropolitan Bank Holding has demonstrated strong financial performance with significant growth in loans and deposits, despite missing the EPS forecast. Their robust capital position and focus on risk management are promising for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Metropolitan's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Metropolitan Bank Holding's performance in the comments below.